oil. As tempting as it is to look at it from a technical standpoint, the fact of the matter is it's got a lot more to do with fundamentals. This move all the way down had to do with two significant items. First off, of course, demand getting hit thanks to the coronavirus, and simultaneously supply surging thanks to an oil price war between the majors, and EIA's oil inventories estimates surging yesterday, kind of confirming what we already knew in terms of a lot of oil supply entering the market and not a lot of people out there consuming it. So when it comes to future fundamental updates, the fact of the matter is that's going to keep the overview more volatile, in the sense that we can expect pivot points to break even if they haven't over the past few days, and that's because we could be looking at significant updates, whether it's a potential deal between the oil majors, whether it's another shale bankruptcy, for example, just as oil executives are set to meet the US president at the White House, or whether it's because more areas in the US will go under lockdown, and that sort of will translate into a further plummet in demand. The fact of the matter is, at the end of the day, breakout opportunities that haven't really been tested as of late could make a swift return. Now, when it comes to traders, however, they've been holding a majority long bias, and I've spoken about this before. A lot of these long positions have been initiating well above market price back when it was around $40 to $50, and you can see that sentiment hasn't really changed that much since, being mapped on the chart. Percent long blue dotted line for retail traders, green dotted for larger speculative traders, according to the latest COT report, with the buy standing over there at 80%. Now, the fact of the matter is that even if there are some movements in price, it could change sentiment by 4 or 5%, for example. But even if we saw a big move towards, for example, $30, it's highly unlikely that sentiment is going to shift among retail traders to majority short, because of the fact that a lot of these longs have been initiated above market price. Yes, short buys could rise, especially because fresher longs could get out and shorts could enter, anticipating some sort of move back down. But until then, majority long buys, or I should say heavy to extreme long buys, experienced by both retail and COT traders, probably here to stay.